All right, guys, let's talk about this operation in Big Bear. Yes, a company focused on artificial intelligence that started a bullish trend exactly on November 19th and basically shot to the moon. Its stocks rose by a whopping 117% at their peak, and its options went from 40 cents to $2.45. Basically, it's a price explosion, and this happens a lot in the American market, folks. And why is that? For two reasons. This company does not have as significant a financial turnover as big techs. And when it stands out for some reason, as the financial volume is very strong, as the amount of money in the American market is so strong, it causes these types of explosions. When we have a company that has a slightly smaller financial volume, we can't say that's small. It was a company that was moving around $18 to $20 million a day, but that's small compared to the huge financial volume of the American market, which brought in a massive buying pressure, pushing the options up to $2. I want to show this to you, explain how it was done for those who want this kind of operation. Is it simple to do this? Is it difficult? Everything in this video, but before that, I'd like to ask you to subscribe to our page, share it with your friends, and give it a like, which is how you encourage me to create more educational content like this, okay? Awesome, guys. So here we are. The stock is basically very volatile. It has strong highs and then strong lows. It is not a simple stock to trade. Look at these significant moments of increase and absolutely crazy volatility. And here, exactly on November 19th, we had a more aligned opportunity for this upward movement. Okay, we identified that there was an option worth 40 cents, so we had a choice. Either buy the stock at $2 or buy an options contract at 40 cents each, basically. That was the decision we made. So 40 cents times 100. So we have a minimum investment of $40 in this operation. So basically we bought some options contracts, right? To be more precise, let me tell you how many there were. 25 options contracts. So 25 options contracts at $40 each. We invested $1,000 here. Right. Nice and neat. For those who are just joining us and haven't seen the other videos, yes, I always mention an approximate risk of $1,000 for options trades, just to make it easier for you to understand. So we have a very strict risk control when it comes to options, and also to show that there's no need to allocate a lot of money when you have options to achieve good financial returns. Okay? So, very good. The upward trend operation was triggered. Best point of this trend, we identified that 40 cents of this option was liquid, and we exchanged it. Instead of paying $2 for each share, we paid 40 cents for each option. The big question is that in the first 4 days, the stock already made a pretty significant upward movement, basically 26%. And when we see 26%, we immediately think of this option skyrocketing. Why? Because we have a study here within all our operations that an increase of about 8% to 10% is already a 100% gain. More or less the options. We had a 26% increase in the stock, and the options still hadn't doubled in value. So basically, I took my profit at 70 cents. So in 3 days, I bought at 40 and sold at 70 cents. Today, looking back, it makes me think, wow, how I sold too early. Right. After all, it went up to 245. Yes. There were subscribers who held on longer and managed to make a profit. Very good and expressive with that, okay? But we're very transparent here, and we also talk about our exits, right? So here is a point where I made a profit of 30 cents per options contract, 30 cents times. $2,030, making a profit of $750 here. So my $1,000 invested turned into $1,750, which brought a profit of $750. Invested turned into $1,750, brought a profit of $750. Small, right? A little, basically very little. Why? Because when we look at it like this, we think, wow, this could easily be around $3,000. But we didn't have this understanding when the market had this outlook. There was an entry, upward movement. It started to correct, and the stock here, look. The option, without gaining value, went from 40 cents at most to 70 cents, and it stayed there. Basically, that was our view of the operation and our profit. So $1,000 were invested, and here we made a profit of $750. But yes, once again emphasizing, there were many subscribers who managed to achieve 100%, 200% positive swings. And who is this type of operation for? This is a type of operation called swing trading. It's daily operations. Basically, each drop here represents a day that went by. So we bought here. On this day, we didn't do anything. On the second day, we didn't do anything. On the third day, we didn't do anything. And on the fourth day, we exited the operation. So I gave a buy signal here and a sell signal 4 days later, bringing this profit of 75%. Who can do this type of operation? Basically anyone who can spend at least half an hour every day looking at the market. You saw here on our channel that we have position trades, operations that you don't need to check throughout the whole week and just look at once a week. But this swing trade is, yes, an operation that requires more of your time, but 30 minutes a day, it's enough. And that's the fun and beauty of these operations, okay? So that was our operational profit, and I hope this video has been very enriching for you. If you're curious and want to understand how we achieve these profits, we're here to help. Take care, everyone. Hugs. Bye. Bye. May God be with you all. Take care. Bye. Bye.